Hello and welcome back to the Live for Today, Plan for Tomorrow podcast. I am super excited today to have a special guest, Gail Balettie. Gail, thanks for being on the show with me today.
My pleasure. Thank you for the opportunity.
Absolutely. And Gail, I'll allow you to introduce yourself here in just a second, but you are the Senior Vice President of Borrower Care and Client Satisfaction at Celink, which, again, we spend a lot of time with borrowers after closing, helping them dealing with not customer service issues per se, but just borrower needs after the loan closes. And so I'm really excited to talk to you today about what some of those borrower needs are, questions, concerns that I've gotten from clients over the years. But why don't you just give us a little bit of background on yourself and introduce yourself if you don't mind?
Sure. This is my 23rd year in the space, believe it or not.
Awesome.
And I've held a variety of different roles, but ultimately my favorite position is those dealing or interacting with the borrowers and making a difference in our borrowers' lives. That to me is the most rewarding part of this business, when we can really change their lives, help them stay in their home, help them live the rest of their life out in the place that means so much to them. So that's really important for me. So with Celink, Celink's been in the space for over 20 years, and we've been the trusted leader, I would say, in reverse mortgage subservicing. We don't own the MSRs. We service them on behalf of the loans on behalf of the MSR holders, which are private lenders, banks, credit unions, investors, all of the above in the industry. Some of them are originating today, some of them are not. But we have a very diverse portfolio across probably 25 or so different clients. And what we bring to the table at Celink is industry and regulatory expertise. We manage and mitigate and reduce servicing risk for our clients, which of course allows them to maximize their servicing revenue and protect their brand reputation, because we understand that's very important to them. We subservice both HECMs and proprietary loans for multiple clients, and private label as well if chosen by the client. We can service either in the name of Celink or on behalf of the client. And our success is really our client's success. We don't compete with our clients. We don't originate. We're exclusively a subservicer.
Awesome. So you said a lot there, and many of the listeners, we've got borrowers, we've got loan officers and so forth. So subservicer, let's start there, and then
Sure.
we'll get into MSR, but subservicer. So in other words, let's take myself, right? And One Trust Home Loans. I originate a loan. We are a mortgage bank. We close that loan, we fund the loan, and we immediately transfer that loan. So talk to us about how that gets to you and Celink so that the borrower ultimately receives their statements in the mail from
Sure.
Celink.
Sure. So the loan originator often sells the loan, as you mentioned, to another lender. That lender owns the MSRs, or the mortgage servicing rights to that loan. They then hire a subservicer like Celink to service the loan on behalf of the MSR holder. So the company that you, as a broker or a lender, would sell the loan to would hire Celink to then subservice the loan. And we will handle everything on behalf of that lender from the day the loan boards until the disposition of the loan, or at which time the loan could be assigned to HUD. So we will produce statements, we will answer inquiries, answer telephone calls, provide them updates on their loans. We provide them a great web portal to manage their loan on 24/7 securely on any device. And so whatever their needs are during servicing, we handle them, and as well with their heirs when they pass.
Awesome. And we're going to get into some of those questions and some of those issues shortly. But again, at a high level, you guys are managing everything associated with that loan post-closing once it gets to you guys in regards to sending statements, in regards to managing the available funds in the line of credit, managing the LISA and the distribution of the LISA or the life expectancy set aside, repair set aside, all of that, right? So
All of the above, correct.
gotcha. Okay. And again, we'll get into the little bit of that, actually a lot of that here shortly. But one of the first questions I have for you, because I've gotten conflicting information on this as a loan originator, once that loan closes and the borrower has questions,
Yes.
my team is always available for that client to help them navigate that servicing and customer service process. But I've gotten conflicting information from different loan servicers that I'm not allowed to be on the phone. I'm not allowed to be in the room. I'm not authorized to talk to the loan servicer. Tell me what I can do to help and what I'm not allowed to do to help ultimately on behalf of that borrower if they have questions or needs.
Sure. So we recognize that the loan officer is an integral part of the relationship with a borrower and their reverse mortgage. And so, as such, we do provide an avenue for loan officers to obtain borrower authorization for us to discuss the account with the loan officer. Or if you call in with a borrower, we're of course going to ask the borrower for permission to have the conversation while you're on the phone, but certainly that can be accomplished. Now, the best thing a loan officer can do is to set their customer's expectation right up front. And if they don't know the answer to a question, don't guess. Please reach out to a servicer or have the borrower reach out to the servicer to get the answer. A lot of our frequently asked questions are on our web portal. So that's a very good resource for both loan officers and borrowers, especially because loan officers are not in the servicing business every day. They're not going to retain the information like we do who live and breathe it every day. But if a borrower reaches out to a loan officer because they really need their assistance or they feel more comfortable with that loan officer because they've established that relationship with them prior to the closing of the loan, we will certainly speak to the loan officer, but we need to have authorization on file. So that's simply a letter written by the borrower, or they can complete our authorized third-party form on the website.
Fantastic. Fantastic. And Nick on my team does a great job with that with clients. And you guys, I will say, Celink always does an amazing job with our clients. There are other servicers out there who we do have some other challenges with at times, but you guys always do a great job. And again, it always amazes me that when a client calls with a question or a concern, that the individual on the other end at Celink is there to try and resolve it on that
Yes.
same call. It's
Yes.
usually resolvable, which again, not all loan servicers have that desire, it feels like, nor capacity to execute that in the same call. So I commend you guys and what you guys are doing for our clients.
Thank you. Yeah, one call resolution is definitely one of our goals. We don't want that borrower to leave that conversation confused about anything. We want to confirm that they fully understand and they have the tools that they need to do whatever it is they wish to do.
Awesome. So let me ask you a couple questions on a few of the most common calls that we get once that loan closes and now it's in your hands as far as the servicing side. But probably the number one question we get is around homeowners insurance and if somebody wants to change carriers, and that process can be cumbersome, right? On their end, there's this lost payee clause or mortgagee clause, and right, it starts as Calcon mortgage / OneTrust home loans, and then it goes to the servicer, and then you guys. So when a client wants to change their homeowner's insurance and ensure there's no lapse in coverage and forced insurance and all that, what's the best process for a client to ultimately go through with you on that?
Sure. And especially now where borrowers are comparing cost of policies and premiums, right? Because the cost of insurance has skyrocketed and borrowers want to shop around and get the best price that they can. So if there's a midterm change, make sure the servicer gets the updated policy, right? That's really important. We need to know who the insurance carrier is. And then the other really important thing for a borrower to understand is make sure that there's no lapse in coverage. If there's a gap in the coverage dates, go back to your carrier and have them to ask if they can get the gap coverage or extend the policy dates to cover the gap. That's the best scenario. So secondly, you mentioned the lost payee clause or the mortgagee clause. That is when we board a new loan boards with Celink, the first thing the customer is going to get is a new loan reference guide. And that is about to be in the form of an email for those borrowers who board with an email. It's also the guide is posted on our website. And in that initial email, we give them the mortgagee clause. Now, we will take care of, when the loan boards, changing the mortgagee clause for them on their existing policy. But if they change midstream, we've got to make sure that's updated. So one thing that a borrower can do too is give their old policy, if it's got the correct mortgagee clause on it, to their new agent, and the agent will get it updated.
Awesome. Awesome. And I assume when you say that the borrower needs to get the new policy to you, that can be done on the website in the portal. Is that correct?
Correct. They could upload it to us. They can email it to us. They can fax it to us. They can snail mail it to us, however they wish to get it to us.
Yeah. And again, you guys really do have a great website. And I know that there's virtually anything that a borrower needs. It seems as though it can be done on the website. Is that fair to say?
That's fair to say. We still have a wish list of things that we're working on. We'd like to make it as robust as possible. But when we embarked on that endeavor, it was with the idea of giving these borrowers options, right? If they want to use a website, they can use a website. If they want to call in, they can call in, use an IVR. They can use email. They can use fax. So providing the option to them was foremost in our mind. And then also making it a website that the demographic could use very easily. And we had focus groups and study groups with actual customers to make sure that they could navigate seamlessly. And if they had any questions or paused on anything, we took another look at, well, how can we make that better so that it's more intuitive?
Yeah. And you guys, again, have done a great job with that. So transitioning, probably the second most common question that I tend to get is around requesting funds from the line of credit, right?
Sure.
And how do they request funds? How long does it take, right? I've got my answers that I tell clients, and I believe by regulation, you and we are required within 5 business days from the time the request has been submitted. Is that accurate?
For a HECM loan, yes. For an
Correct.
FHA insured loan. For proprietary loan, we follow that best practice,
Mm-hmm.
but there's not a regulation around it per se.
Okay, interesting.
But the best way for borrowers, I think, to request funds is through our secure portal.
Mm-hmm.
Number one, the request is going to be received much quicker. We're not waiting for mail. We don't have to worry about, did the fax get there or not? And then the funds will be going out to them to their predetermined disbursement method. So the bank account's already been vetted. It will go to the bank account containing the borrower's name, or to a check made payable to the borrower.
Okay. And that's an interesting point, because whenever we do close an adjustable rate, HECM in particular, but also proprietary, we suggest that the borrower bring a voided check into closing.
Absolutely.
So that account is the account that's set up when the loan servicing is set up. So when a draw is requested from the line of credit, that it'll just be ACH'd. And in some cases, it's 24 to 48 hours. It's not 5 days, but in some cases it's actually really quick.
Right. It's actually going to shave off a day or two if they will submit it on the portal versus having a manual intake. Because we've got to receive it, we've got to open the mail, we've got to log it. There's less processing if they'll submit the request on the portal.
Fantastic.
And then they can also log back in on the portal and see the status. We have like a little process tracker for them that shows it's in process, or it's been approved, or it's been dispersed. So they can check their status right there online.
That's great. Fantastic. So the third and probably most common question we get, is around this occupancy affidavit annually. And is it fair to say that from the time the loan closes, that the annual occupancy is due every year on that anniversary date, basically. Is that fair?
Every year on the anniversary date of the closing.
Of,
Yes.
of the closing. So if we closed
Right.
on November 7th, right,
Right.
then every November 7th thereafter, the annual occupancy date. So borrowers can plan, right, and say, okay, I
Yes.
closed. They can put it on their calendar and they can say this is when they have to get it in by, correct?
That's correct. And going back to the options, now that HUD in November of 23, HUD announced that a verbal occupancy is acceptable. So at Celink, we have made that process very easy on our IVR. If a borrower calls in and their occupancy is due, it immediately prompts them and lets them know, would you like to do that right now? It takes just a little over 3 minutes for them to certify it on the IVR, or they can log into the portal and the portal will also prompt them and let them know it's due. Or they can wait for the form in the mail, which is not preferable. But if they do, they can send that in via email or fax or mail. And we won't mail them a form if they get it, if they get their occupancy certified on the IVR or the portal, we don't have to mail them a form. But if we do end up mailing it, it will always be in a bright orange envelope. So they can distinguish that from all the other junk mail they get. They get a lot of, especially home warranty solicitations. That's probably the number one thing we hear.
Absolutely. And so that's good actually for me to know because I thought the annual occupancy affidavit came with the monthly statement,
No,
but you're saying it's in a separate envelope. And by the way, is that just a C-Link thing that it comes in an orange envelope or is this
yes,
okay?
yes.
So
As
if
far as I know, I can't speak for other servicers, but that's
yeah,
something that we instituted several years ago.
okay.
Yeah,
So good. So if it's due in November, that will go out in October typically, would you say?
correct.
Okay.
Correct. And we send them heads up emails and then we send follow-up emails. We send about 2 to 3 emails a month to the borrowers who haven't certified,
Hmm.
letting them know it's still outstanding. And those emails will stop when they do that. We also put messages on their statements if they haven't certified their occupancy. And we have dialer campaigns that call out as well and to let them know that that's due. So they've got multiple channels of communication that will help them stay in compliance with that requirement.
Awesome. And by the way, does that orange envelope and by the way, the statements at the same time, do they actually say C-Link or do they say the name of the lender like Finance America Reverse as an example?
They say the name of the loan, the name of the lender that we're servicing the loan in the name of. So if it's Finance of America, it'll show the logo and the name of the lender in the window envelope. It's actually two windows, the window for the address and then the window for the return.
Okay. So even though we're talking to you at C-Link, what's interesting is because you're a subservicer, the
Right.
borrower's not going to know the name C-Link.
That's right. So we never use that name with a borrower.
But is it fair to say that any loan that you subserviced for, the address is always going to be in Lansing, Michigan? Is that
Correct.
accurate?
Correct. Yes, we have one PO box and one physical location now for borrowers, and it's in Lansing. Actually, we have a separate. The PO box numbers change slightly based upon whether it's a line of credit draw or an occupancy, but it's all in Lansing, Michigan, and that is where our office is now.
And that's usually how I can tell a borrower when they call and I'll say, tell me the
That's right.
address that you're seeing on your monthly statement, and then I can tell if it's being subserviced by C-Link or not. Say, is it
Correct.
Lansing, Michigan? Yes. Okay. Then I know how to help them navigate the process based on that.
Exactly.
Uh,
Exactly.
but that's very interesting. So uh, I know you had mentioned in as we were preparing for this conversation today, something about, required repairs. When we
Right.
originate a loan, I assume you were talking about a repair set aside, right?
That's
So,
right.
and I've got a couple right now as an example, and let me just give a little bit of background for folks listening that don't know what we're about to talk about. But when we do an appraisal, if the appraiser comes back with any health or safety concerns that need to be addressed and or repaired, but are such that the underwriter determines we can close this loan without the work being done, but we're going to earmark enough funds, 1.5 times the estimate, right? So if the estimate to do the repairs is $1,000, we're going to set aside $1,500 from the borrower's available funds into a separate account that's earmarked for what's called a repair set aside. Then the
Correct.
borrower can effectively close that loan, and then they have a specified amount of time to do the work and have those funds released. So talk to us about the repair set aside, the time frame and that process, and what borrowers should be aware of, and maybe some gotchas, if you will, that they need to watch out for.
Sure thing. So, first of all, the lender will identify on the repair rider what the expiration date is. And some lenders use 6 months, some use 9, and some use 12. Preferably, they use 6 because the longer we wait, the less chance there is that the repairs are going to get done on time. And HUD will allow up to 2 90-day extensions. But in no case longer than 12 months. So if your repair rider deadline is 12 months from closing, then you have no extensions available.
Gotcha.
So really critical for borrowers and well, for loan officers too, is make sure you have the conversation with the borrower right before closing or at closing, because when the underwriter identifies the repairs that are required, that's earlier in the process. And by the time they get to closing, it's out of sight, out of mind, right? So it's a good reminder for loan officers to have that conversation. And generally speaking, the underwriter is going to require any health and safety repairs be completed prior to closing. It's those that are not health and safety related that will be done after closing. So maximum deadline, again, 12 months, repair rider plus two 90-day extensions if it's a 6-month repair rider. Paying for the repairs funds are set aside and dispersed generally in thirds. So as the work gets done, the borrower will communicate with us. We will send an inspector out there, and if we get a satisfactory inspection, we can disperse the payments in thirds. We can disperse funds up front for the materials as long as they're on the job site and ready to go. And the checks will be made payable, really key here, to both the borrower and the contractor if a contractor is used. And that's so that the borrower's getting the funds, they're signing the check over to the contractor, and that's their acknowledgement of the work was done. It is completed to my satisfaction. Otherwise, don't sign the check over to the contractor. Do they have to have a contractor? No, they can do the repairs themselves, but they still have to pass an FHA inspection in order to close out the repair rider, the repair set aside, and make those funds available to the borrower, which at the end of the day, when there are funds left over, if they didn't use them all, as long as they have an open-ended loan, those funds will go into their line of credit and they'll have access to borrow them. If the loan is fixed rate closed end, those funds are never used and never borrowed. So they're not part of they're not aggregated to the loan balance. So it's not funds the borrower borrowed or owed in a payoff quote situation.
Gotcha.
Let's see. And if they don't, let's talk about what happens if they don't complete the repairs within the 12 months. That's not a good situation, especially for borrowers who get a monthly payment or need access to their line of credit. Those funds are frozen until the repairs are completed and inspected. The funds in the repair set aside, however, remain available for them to use to complete the repairs. Those are not locked up. So that's an important distinction.
So just to clarify, if the time frame is a year that the borrower has in the repair rider to do the work and they don't do the work in that year, the repair set aside funds are still available for the borrower to do the repairs, but any other funds in the reverse mortgage or the HECM rather between line of credit or monthly payment ceases and is frozen.
They're suspended until the repairs are made.
Okay. And once the repairs are made, when you talked about an FHA inspection, are you saying that ultimately the original appraiser goes back out and re-inspects, or is there a different inspection process?
It can be either or. Sometimes the original appraiser is available to do the inspection. Sometimes they're not. And so if they're not, it will be another FHA approved appraiser.
Okay. Gotcha. Yeah, we're seeing more and more repair set-asides, more and more required repairs prior to closing. In Colorado, where I am specifically, we tend to see peeling paint,
Yeah,
right?
that I think that's on every repair set aside.
Is it? So
That's
we
very
see that
common.
often.
Yeah,
Yeah.
and so one thing I encourage loan officers to do is get their borrowers to get bids and line up contractors even before they close, so that when they close, they can immediately start. Because if you delay, you're going to run into weather delays in parts of the country that get snow or rain. The availability of contractors may not be great in your area, but if you line them up ahead of time, usually when you hire a contractor, they're out 2, 3, 4 weeks with business already promised, right? So line them up ahead of time so that they're ready to go when your loan closes.
Sure.
And then if they have to order any materials, they can do that too.
Yeah, it's great to know that they can request funds up front before work has even begun to cover the cost of materials as long as
Right.
materials are on site. That's really great to know. I did not realize that. So,
Yeah, a lot of contractors will require that, right?
yeah, sure. I got two other topics, and I know we're running low on time, but I really would love to cover number one, an insurance loss situation, such that somebody has an insurance claim due to a natural disaster. We unfortunately here in Colorado, we've had a lot of fires in the last couple of years, so it's become a hot topic of conversation and questions that borrowers ask. What happens if we've got, hail, flood damage, these sorts of things? So, talk
Hurricanes.
hurricanes, yeah, in Florida, unfortunately, in North Carolina
Right.
this year, it's been awful. So, talk to me a little bit about what that process is that a borrower needs to go through if they have a loss.
Sure. So the first thing we encourage them to do is call their insurance carrier and file a claim. If they have lender-placed insurance, they can do that through our provider, and that information is on our website. Take pictures of their damage and start gathering any documentation they have. If they're getting, my home was recently hit by lightning, unfortunately. So
Oh
the
my
first
gosh.
thing I
Wow.
did was get an inspector out here, got his estimates, and gathered all that information. That's not to say that what you submit initially is going to be it, because as I've learned through this process, there are other things they are finding as they go in to fix things. So it can be an iterative process. You can submit documentation. Once your insurance company cuts a check, that's not the end of it. You can always go back and say, but wait a minute, this wasn't enough, and here's the contractor's information, or here's more receipts. And the checks will always be made payable to the servicer and the borrower. And that's because of that mortgagee clause, loss payee clause that we mentioned earlier. So servicers have to monitor that claim and make sure, just like first year repairs, that the repairs are getting done and they're being done correctly, and that they'll pass inspection. And again, we will do the same as we do with first year repairs. We'll release those funds in thirds as the work gets done and the inspections are completed. And if there's not enough funds, they can always go back to their insurance company. But if that isn't successful, there are other resources for our borrowers to look into. We have lots of nonprofit organizations such as Rebuilding Together that can help a borrower. We have a special toolkit coming out very soon, without giving too much away. Within the next couple of weeks, toolkit for borrowers can go on our toolkit and help them to provide home repair, or help them find repair providers. And then we also have the situation where the property is not habitable. It's uninhabitable for a period of time. If it's serious damage. And the question we always get is, well, what if my occupancies due at that time, right? Well, as long as we have an owner affidavit that says they're going to rebuild if they need to rebuild, that's sufficient because the property is technically still their primary residence, right? They didn't go buy another house. They're probably living with family or in a hotel or what have you. But that's not a move out situation in the traditional sense.
Gotcha. That's great clarity. Appreciate that. And yeah, it's interesting. We actually had at the end of December of 2021, major fire called the Marshall Fire in Colorado.
Yes.
And there was a situation, actually, a gentleman with a reverse mortgage had been given a notice of foreclosure, ultimately, because he was not occupying the home. And since that, Representative Kyle Brown led legislation to actually get Colorado as a state, you probably know this better than me, to extend the statute around occupancy. And I believe, if I'm not mistaken, with natural disaster, people have now up to 3 years. Is that correct? With occupancy?
I'm not clear on that, but that wouldn't surprise me. I'm familiar with that case, and like I said, if the borrower is rebuilding, they're not occupying that property because they've gone and purchased another primary residence, right? It's a totally different situation. So,
Well, and
oh, and the other thing I wanted to mention is we have a great video on our website on lost drafts, which walks the borrower through the process. So that's another great resource. And for loan officers too, they can see that video.
that's great. And that actually leads me to probably the last and most important conversation here around what happens in the end, right? Dealing with family, what happens when the borrower or borrowers permanently leave the home, right? Whether they pass away or they have to move to another living situation, assisted living, memory care, something like that. We're not talking about selling the home right now. I'm just talking about if somebody is no longer occupying the home or they've passed away. You mentioned communicating, right, with the loan servicer. And I'm guessing that's probably the number one thing that is most important, is to have the family communicating with the loan servicer. But talk to me about what that process and what those steps might look like.
Yeah, sure, absolutely. So, when borrowers talk to their families about end of life planning and what happens when I go, it's important that they make sure that they communicate that they get a monthly statement, their servicer's number is on the monthly statement, and that's who the heirs should call, right, in the event of their passing. We also have a video online for this very topic as well on the website. But basically, the heirs options at that point are either to pay the loan in full and retain the property if they wish. They can sell the property, as you mentioned. They can do, if there's no equity in the property and they don't want to be bothered dealing with the property, they can execute a deed in lieu of foreclosure instead of going through a foreclosure process. But the key there is that we have to know who's authorized on behalf of the estate to execute that deed. And then for a deed in lieu, the property would need to be in broom swept condition and have no other liens on the property other than the reverse mortgage. So clear title. That's really the options. Short sale is always an option as well if it's approved, which means a short sale means an heir or can sell the property to another heir or to anyone else as long as it's a post-death conveyance for 95% of the appraised value, regardless of the loan balance. So that's a big benefit if the loan balance is above market value.
So let me break this down, because this is a really, really hot topic in every conversation I have with clients, because I do believe that what you're talking about, this protection effectively, is because of the mortgage insurance that makes a HECM in particular, home equity conversion mortgage, a non-recourse mortgage, even though all reverse mortgages, to include proprietary, are non-recourse mortgages. But what you're talking about is if the borrower ends up owing more than the value of the home at the time they permanently leave the home, then the family / heirs or estate can sell the home for 95% of fair market value for a full payoff with zero liability at all.
Correct. Correct. That is correct. And that, for some borrowers, heirs who did that when the market was down in 2008, they had a great windfall, right, in the increase in those properties.
Sure.
But that is correct. They won't owe any more than 95% of the current appraised value at the time the short sale is in process.
So with that, who determines current fair market value or appraised value? And when is that determined?
Sure. So the heirs should let us know that they want to pursue a short sale, and at which time we would order an appraisal from an FHA approved appraiser.
Okay, so Celink or
The
loan
servicer.
servicer is going to order the appraisal, and I'm assuming bill that to the account.
It'll be billed to the loan, correct?
Okay, so those charges will be added to the loan balance, I assume, at that point.
Correct.
But that is then what's utilized for approving a short sale. So let's say fair market value at this time is $500,000, and the family decides we're going to sell this home, and they get an offer for $475,000 on that property. Does
Right.
that mean that that offer is unlikely to be approved if fair market value was $500,000 at the time of the appraisal, or they just need to submit that offer to the servicer to determine if it's approved or not?
The offer has to be 95% of the value.
95% of the value of that appraised value.
Correct. Yeah, correct. Regardless of the balance on the loan.
Okay, so that's it. That's the defining
Right.
condition to quote unquote approve a short sale. As long as it's 95% or above, hypothetically,
Correct.
then it will quote unquote be approved.
Correct.
Okay, great.
And it meets all the other requirements, of course.
Sure, sure, of course.
Now, one thing I do want to bring up, when borrowers pass away, there's a misunderstanding out there, and we talk about this all the time, that that their heirs have a year to sell the property.
Yes.
That is not true. And no loan officer should ever say you have 12 months after your parents pass away or after the borrower passes away. Servicers have to meet strict HUD timelines, which means that we're going to have to refer the loan to foreclosure counsel typically within 90 days of the borrower's passing or less. Well, what happens when you refer it to foreclosure counsel? Foreclosure fees start accruing. So the loan balance starts to grow. So in order to get an extension not to refer that loan to foreclosure, we need immediate conversations with the heirs and proof of their effort to either sell the property or pay off the loan. They could provide, their own loan approval. They could provide personal funds if they're going to retain the property, life insurance, listing the property with a realtor. They can do a for sale by owner, but there's requirements, that have to be on the sign. It's got to list the contract price and et cetera. And all of those requirements will be in the due and payable letter or the demand letter that's sent to the borrower's residence and to any other known heirs. If we have addresses of other known heirs, it'll be sent to them as well. But all of that information is included in the demand letter, as well as a letter of intent, so that the heirs can tell us what they're thinking about doing to resolve the debt. Are you thinking about selling? Are you thinking about keeping the property, et cetera? So let's talk about probate. There's no extension specifically because probate's required. Okay. The extensions are available only if we have proof of efforts, meaning they're listing the property or they're going to pay off the debt. Probate alone does not qualify for an extension.
So let me make sure I understand what you're saying. So in other words, first and foremost, the heirs, and when we say heirs, what does the heir need to have in order to show authorization to speak to you on behalf of the borrower if the borrower is no longer alive? Do they need a power of attorney, or do they need to have been listed as an alternate contact when the loan closed, or what's needed, first of all?
So initially, when we find out about a borrower's passing, we'll speak to whoever was authorized on the account pre-death, whether that be an authorized party or a power of attorney, et cetera, or someone who provides us a death certificate or a copy of the trust or a copy of the will. We'll speak to that person until such time when we receive conflicting information that we should be speaking to so-and-so because he's the executor or the personal representative of the estate. So whatever court documents are provided identifying that person will be ultimately the person we need to work with.
Okay. And from there, the family has 6 months to get the reverse mortgage paid off. However, if they are in good communication and they've identified a plan with supporting documentation of their plan that they're trying to get this paid off through any of the means that you mentioned, there are 2 potential 90-day extensions, which means if they do everything right, it's not going to go into foreclosure. It's not going to accrue foreclosure fees, and they could potentially have up to a year to pay off the reverse mortgage, but none of that is guaranteed unless they follow the proper protocol and stay in good communication with the loan servicer.
Right. And they need to act immediately. That's the most important thing. They can't wait for that 6 months because, as I mentioned before, we have to refer at 90 days and sometimes even sooner. So immediately they need to, this is why pre-planning and preparation is so important with the customer, right? The customer needs to have these discussions with their family so that they have an idea when the eventuality occurs. Hey, we're going to keep mom and dad's house, or hey, we're going to sell mom and dad's house, right? And then when the event happens, they'll already have an idea in their mind of what they're going to do so they can communicate more effectively and take action faster, because we have to get the extensions before the 90-day period. Otherwise, fees are going to start to accrue.
Gotcha. And all that to say, you've got a grieving family or spouse or child or something, right? So acting immediately, I know you don't mean the next day necessarily, but obviously within 90 days, right? Because you guys, correct me if I'm wrong, but as the servicer, you have your methods and your means for finding out when a borrower passes or when a borrower is no longer occupying the home, between Social Security notifications, right? And other means I'm sure you have. So heirs are not going to pull the wool over your eyes per se, right?
They're not going to gain anything by delaying. They're only going to hurt themselves, because we do have a weekly file with a vendor that tells us of reported deaths and the Social Security index, which is in HUD's Hermit system. And sometimes we won't know who the heir is, so we can't even proactively reach out to that person, right? If they're not on the account pre-death, we won't know who the heirs are or who the alternate contacts are. So that's really important that they reach out sooner rather than later.
Do you ever reach back out to the loan originator or the originating mortgage company and say, just want to let you know, we haven't had any communication. We don't have an alternate contact. We're really struggling in this. Maybe you can help us. Is that something in your process at all?
Yeah. So especially if there's equity in the property and we think heirs are going to leave something on the table if they don't get in contact with us, we'll reach out to the client and say, hey, we cannot find an heir. This happened very recently to a gentleman, a home in Houston, and we could not find an heir. The client could not find an heir. So we had no choice other than to foreclose. But we do not like to foreclose ever, but especially in the case where there's equity in the property, because those funds are rightfully belong to the heirs.
Sure. And I think that's a really important point, Gail, that obviously you guys at Celink and other loan servicers, I know I've complimented Celink a lot today, but all loan servicers that I've dealt with over the years truly do have good intentions and do not want to foreclose and are not trying to take properties and are not trying to take equity away from homeowners. That is not the goal of the loan servicer, even in the end.
Right, that's correct. It's way more expensive to foreclose and to manage an REO than it is to have a great resolution with those heirs on that property.
Absolutely. Gail, this has been absolutely fantastic. I know I took a lot more of your time today than
That's okay.
probably expected, but thank you so much. Is there anything else before we wrap up that we didn't cover that you think is really critical, maybe on the loan servicing side, that listeners should know?
I think that the most important thing, well, I often tell loan officers a few things. The best thing that the best service they can do to their customer is make sure they're prepared for servicing and make sure they know how to get in contact with their servicer, make sure their loan boards with an email address. We are very communicative proactively with the borrowers when we have an email address. If we don't have an email address, it's a little bit more difficult. At least make sure we have phone numbers and good phone numbers, right? Set up that direct deposit at closing, like you said. Make sure that the borrower understands what repairs are required and when they're required. Make sure they understand their first year funds limitation, because that's often another thing that comes up that's confusing for them, right? They can't access any more than their first year initial disbursement limit. And then how to access their funds. We talked about that. And then really just about their obligations. And a reverse mortgage borrower's obligations are to certify their occupancy annually, pay their property charges unless they have a fully funded LISA, maintain the property, and complete their repairs, right? That's in a nutshell what the borrower's obligation is in a reverse mortgage.
And by the way, everything that you just mentioned there, as far as their obligations, the only additional obligation I believe that you mentioned that is above and beyond a traditional mortgage is the occupancy piece.
Correct. That's correct.
The only additional requirements. So yes, it might sound like a lot, but these are the same exact requirements as any mortgage or any line of credit that a borrower might have. So
That's correct.
yeah. So, well, Gail,
Correct.
thank you so much. Thank you for what you do. And thank you
You're
for taking
welcome.
the time today. Really appreciate it. This has been really insightful. And I think it's going to be very valuable for a lot of people.
Thank you. And thank you for the opportunity.
My
Always
pleasure.
here to help.
Thank you for that. And if people do want to reach out, want to get a hold of either you or the website, what is, and I'll put it in the comments as well, but if you
Sure.
want to go ahead and share that, please do.
So the reversedepartment.com is the website, reversedepartment.com. And then we have a contact page on that website. And all the departments are listed there, and we're happy to help anytime.
Thank you again, Gail, and maybe we'll have you again soon if we field some additional questions from this.
Sure. If there are questions remaining, I'm happy to do it again.
Awesome. Thanks, Gail. Have a great day, and we'll look forward to having you again.
Thank you, Gabe.
All right. Take care now.
Bye-bye.
Bye-bye.